But we are going to talk a little more about one of the big reasons Dow's been crossing 40K, at least today. Walmart, the gains in that stock are helping out on its earnings beat and also the positive outlook. UBS analyst Michael Lasser joins us now to talk more about it. So, Michael, reasonably high expectations, it seems to me, toward Walmart. The street was pretty comfortable with the story, yet still pleasantly surprised. What in the numbers do you think they're keying off of?
What the market's keying off of, Mike, is that if you're a shareholder, every signal from this report was exactly what you would hoped it to be. And if you're not a shareholder, the signs from this report are suggesting that you need to at least take a look at this stock to own. The keys of the report were 3.8% same-store sales growth in the United States, entirely driven by traffic. That is going to outshine most of the other retailers during this quarter. The other noticeable point was operating income was up $900 million year over year. 1/3 of that came from alternative revenue streams, things like selling advertising to online sellers, marketplace fees to third-party sellers, logistics services. If you annualize that, that's $1.2 billion of incremental profit that Walmart should get this year versus last year. That alone can drive 4% growth in the company's overall operating income. So this is going to really help. This report will help the market take notice.
Yeah, I guess the other two things, maybe themes that came out of the commentary were initially somewhat higher in consumer, accounting for a good deal of the beat. And then I guess the other piece of it is just the cost advantage of grocery and eating at home versus restaurants. All that suggests if that much more spend is maybe being funneled toward Walmart and grocery, they're a price leader. It seems like it would have a relatively kind of dampening effect in aggregate on pricing power in retail.
They did say that in aggregate, 40 basis points of the growth came from like-for-like price increases. So that's a reflection of inflation at this point. But you keyed on two other important factors here that Walmart's doing a very good job of capturing incremental wallet share across the income spectrum, and it is benefiting from the macro environment. Now, with that being said, you should attribute this report not to just Walmart being at the right place at the right time. It's really executing well on its strategy, which is to serve all consumers in a way that is unique, and as a result, it's really having the impact on its P&L.
Michael, we made note this morning of the growth in advertising up 24, and I wonder if you think it helps alleviate some of the hand-wringing on page one of the Journal today, questioning the company's regime in their ability to grow revenue fast enough to keep that 4% growth target.
Yeah, I do think that this puts some of the skeptical arguments at rest. Your point is a good one, Carl, that this is a large business with $600 billion plus in revenue. It's just hard to grow that given the law of diminishing returns. With that being said, the company is showing that purveying merchandise and that business can be very lucrative when you do it at scale. What's driving the growth here is its alternative profits, as well as the implementation of automation, and that's driving this virtuous circle that's making it more appealing across income demographics and to a wide variety of stakeholders. That's not going to slow down anytime soon. So those skeptical arguments, I think, are off base at this point.